The analysis profit with and against the trend reveals your average trading performance depending on the market trend at the time of trade opening and depending on whether you open the position with or against the trend. In the analysis, both the short-term, abbreviated with ST in the chart, and medium-term trend, abbreviated with MT in the chart, are taken into account. If your trade direction matches the current market trend of the asset or currency pairs you're trading, this is shown with a plus sign. With a mismatch to the underlying market trend is shown with a minus sign in the analysis. Have you ever wondered whether your trading performance is better in case you follow the trend with your trades? Well, at this pretty much every beginner trading class is telling you that trend is your friend. Also, you may check different time frames of the chart. The 5 minutes, 15 minutes, 1 hour, 4-hour chart and have a look for matching entry signals. The output of this analysis will tell you whether your performance is indeed better in case both the short-term and the medium-term trend match the direction of your trade. As much as some traders will follow the trend, aiming to have positions that run for a longer time and try to rip as much of the trend as possible, other traders focus on trend reversals. Your strategy might be to follow a medium-term trend, and in case the short-term trend mismatches the medium-term trend at this point, you are looking for potential reversal set up in the 5 or 15-minute chart in order to get a good entry point to follow the medium-term trend. The output of this chart, and especially also the area in which you have a trading edge, are very different from trader to trader, and their respective trading strategy and underlying philosophies. Let me give you an example from my previous trading and also from a good trader friends of mine. We used to identify resistance and support area in the chart based on the technical setup and trade those. We were not very successful with it. However, I realized that a large share of our trades were in profit for the first 2 to 3 minutes. I reduced the time frame of my trade significantly and was always seeking to just realize a small profit between 5 to 10 pips per trade. I actually had quite a good hit rate with it, but I was not able to overcome my trading fees in the long term. I actually manually went through my previous trade and checked whether there was a performance difference in case the trade were with or against the trend. There was no significant result in this. My friends, on the other hand, took a different approach. Always, when reaching 10 pips profit in the trade, he wouldn't close the position, but add a second position in the same direction, setting the stop loss for both positions 5 pips below the second entry point. Thereby, in case the position was lost, he would not lose any money overall, because the first trade made a profit of 5 pips and the second trade lost 5 pips. He will continue this 2 to 3 times more in case the trade keeps running in this direction. The overall hit rate of trades that end in profit was quite low, but for those trades that actually went for 40, 50, 60 or more pips in his direction, he made a huge profit because he added multiple positions to his trade. Some traders reduce their position size as the trade moves into their direction, always banking a bit more of profit. He did exactly the opposite. So why am I telling you all of this? The absolute crucial factor for his trade was that he was looking for setup in which the trend matched on multiple time frames. Only then he would enter the trade. He pretty much never closed a trade manually. He always adjusts the stop loss along with the trade. Once he hit great momentum and would realize a 100 pips trade, he actually made 100 pips from his first position, another 90 pips from the second, 70 to 80 from the third, 50 to 60 from the fourth, and sometimes even another 30 to 40 from the fifth. This is overall a profit of 340 to 370 pips with one trade. Based on his analysis, the likelihood of realizing a beautiful trade like this was much higher if both the short-term and medium-term trend match his trade direction. Now let's have a look in the chart to understand how you are performing when trading with or against the trend. In the chart, you see 5 bars, showing your performance in pips. You may also choose to see your performance in return. The first bar shows your average performance over all trades, no matter whether you traded with or against the trend. In the second bar, you see your average performance per trade when your trade matched both the short term, abbreviated as ST here, and the medium term trend, abbreviated as MT here. The plus sign means that your trade matched the trend at the point of positioned entry. The trend is defined based on a mix of indicators and is consistently tracked for all the assets in our database. For the short-term trend, we only look at the last couple of minutes and hours, while medium term is defined based on the market development in the last few days. The third, fourth, and fifth bar show your average performance depending on whether your trades match the short and medium term, with the last bar showing your performance in case both the short and medium term trend do not match your trade direction. This would apply, for example, if you enter an EUR-USD long position, but both the short-term and medium-term trend are bearish. Lastly, the red bar indicates that you have a significant loss-making pattern, while the green bar indicates a significant profit-making pattern, in case the short-term and the medium-term trend match the trade direction, as well as if the short-term direction matches, however, the medium-term direction does not match. In case the short-term trend does not match the trade direction, however, the medium-term trend does, the average result in pips of the trades is still positive, however below its own average of 1.4 pips. In case both short and medium-term trend do not match his trade direction, the result is even negative on average with minus 0.5 pips, representing a loss-making pattern. You can also choose to see your performance for shorter time frames, which is especially helpful in case you want to track your recent performance in case you're working on your trading right now. The yellow lines indicate the trading performance of profitable traders, which shows a similar trading style to yours. The trader, as we have seen in the output chart, certainly shows a better performance in case the trade follows the underlying market trend of the asset at trade opening. This may not be surprising in case your strategy is based on riding the trend with your trades. What might be surprising to the trader is that if not following the trend, he or she even makes a net loss with those trades. The overall performance of this trader is positive. However, it would have been more positive in case those trades were not performed. If you see a similar pattern for you, be aware that completely stopping certain trades may have a significant influence also on other trades of yours. Therefore, it is oftentimes the better solution to first of all reduce the lot size for the trades which would fall into a loss-making pattern instead of completely avoiding those trades. You can then gradually adjust your trading behavior without heavily affecting other parts of your trading. It may be that you have strong profit and loss-making patterns in this chart, and you may well boost your trading performance by actively seeking market situations like this for trade entry. Other traders will not see strong patterns here as they trade only very short-term, seeking technical setups. A very typical output in this chart for new trader is that the profit is slightly better for trades in which the short-term trend matched. However, that medium-term trend does not really influence the trade result. These situations are oftentimes caused by the fact that the traders are not able to hold their position to possibly reap further gains. If this is the case for you, you may want to check the analysis on manual trade closure or profit if the trade is closed later. Those will reveal whether you have an improvement potential by being able to hold longer onto trades which actually match the underlying market trend. In case you do have a significant loss-making pattern due to entering trades during certain trend scenarios in the underlying asset or currency pairs you are trading, you may choose to receive a notification from us warning that you have just entered a position which on average yields you an underperformance in your trades. Trading can be very demanding, and a little technical support may actually help to free your mind and focus better.